the S&P 500 hits record high as stock market worries about Iran and AIEs. That's the headline from the New York Times today. The benchmark index rallied 1.8% on Tuesday, pushing past its previous peak from early June and capping a strong rebound that has lifted the index nearly 6% over the past week. The surge was led by a recovery in technology stocks and bolstered by signs that a peace deal between Iran and the United States might once again be in sight. After a jittery response to last week's comments from Kevin Warsh, the new Federal Reserve chairman, stocks have been lifted by the prospect of fewer immediate rate increases, strong financial results from big technology companies, cooling tensions between Iran and the United States, and a rare intervention in global markets by the Treasury Department that also helped prop up domestic markets. Investors have latched onto comments from the Trump administration in recent days that Iran and Qatar were making progress in talks to reopen the Strait of Hormuz, a vital oil shipping route, helping extend a turnaround in technology stocks that began last week. However, investors remain concerned that artificial intelligence companies spending hundreds of billions of dollars building out data centers may yet run into trouble, such as from less expensive models being developed primarily by China. The S&P 500 has swung high and low over the past 2 months, at times rising on hopes that the conflict with Iran was nearing an end or because of strong earnings by a large AI company, only for negotiations between Tehran and Washington to fall apart, or for fears about tech overspending to re-emerge. Last week, the Nasdaq Composite Index came close to a correction, Wall Street's term for a drop of 10% or more from its recent peak. By the end of the week, investors' fears began to ease and the market stirred to a rally again. The Nasdaq has risen more than 9% since last Wednesday. Stocks have been supported by continued strong corporate earnings, with companies recently reporting financial results for the 3 months through June. 86% of the S&P 500 companies that have reported this earnings season have posted earnings per share results that beat analysts' forecasts, as of Friday's market close, according to FactSet. In another move that helped ease the market's jitters, the Treasury Department stepped in to stabilize Japan's weakening currency. The yen had fallen to a 40-year low of 164 per dollar in recent weeks, in part because of worries over the government's spending plans. The currency's drop was intensified by a rise in oil prices. Japan is a large holder of treasuries, and that intervention provided additional calm. That's the latest from the markets. Thanks for listening.